It is that time of the week. We sit down and talk to our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital. We talk about all kinds of fun, chaos, politics. Who knows what we're going to get up to today? First and foremost, when last we spoke, the one big, beautiful bill wasn't a law, but it is a law now. And is that going to save all of the things that are the ills of our America?
Well, as controversial as this may sound, no, it doesn't fix the world. The ice caps have not stopped melting, and polar bears are not out of danger yet. I know, man. It's the polar bears. So many sleepless nights. But the one thing that there's multiple things that you can say about it that I don't think are non-positive, meaning when you're looking at the economy on several different fronts, there's definitely a lot of weak spots. I don't think there's anything that is a red flag worthy. But if you're going to boost government spending by additional $500 billion, that's going to cover in some of those weak spots, right? I would, because of that, I think that's probably what's driving the market rally right now. The stock market loves irresponsible government spending. Bitcoin made new all-time high. Gold's within $140 of its all-time high. So now all of this in the backdrop of you now have what we refer to as the Warren Buffett Indicator. So Buffett himself said that his favorite way to value the stock market is to look at the stock market as a percentage of GDP, so total economic output. And just in the last 2 days, that has hit another record high, like an all-time record high. You're at 210%. Now, it's not a perfect metric. There are things that have changed over time. For instance, companies have become much more internationally exposed, so that kind of... But when you're looking at a market that is rocketing higher, that's already at 31 times earnings, that's got all that deficit spending going on, that's at 210% market capitalization to GDP, and that is 70% of all, which is by far and away a record. It represents 70% of all international market capitalization. We've started looking abroad, and it's the one reason that we're having a really strong year. I think we're up between 18 to 20% now. It continues to be a head scratcher to watch so many U.S. investors claw and fight over these ridiculously. I'll throw one out there that everybody knows. I was reading an article today about Tesla. Okay, this analyst came out and said he reiterates his buy order, and his price target on Tesla is $320. Well, coming into the day, it was trading at $300. But he was basing that valuation, I kid you not. He said, we are basing this valuation on 15 times 2040's projected EBITDA. So he's looking 15 years down the road. I don't even know if Tesla will exist in 15 years.
No doubt.
He's looking 15 years down the road and projecting revenues and profits coming from business lines that don't yet exist. Robots, full self-driving, all the... And look, my point is not that he is wrong. My point is not that he is right. My point is I don't think I have seen a better temperature gauge for how disconnected this market is from anything fundamental. I'll just tell you, sitting in a lot of those rooms in normal times, if an analyst comes in and bases a price target on EBITDA that he's projecting 15 years out, like that's a punchline to a joke, right? Like everybody would laugh. You would just assume he was joking. This is the stuff that gets passed off as hardcore research these days.
It's nuts.
So it is nuts. And when I see that, I look at that and somebody goes, based on that, what do you think the target of Tesla is? And I go, well, that is nothing. So based on that, pigs can make pepperoni pizzas. I mean, I don't know what you want me to say, right? Like,
yeah,
I'm not telling you the stock is going to 50. I'm not telling you it's going to 500. I'm telling you, you've got all these things that are so far off their intrinsic value today. You know, it's like it's I try to equate this to people that don't do this all the time. And I'm like, it's sort of like getting lost in the woods, right? Meaning at a certain point, you're so far gone where anybody thinks the previous trail is really doesn't matter anymore, because you may actually now be closer to your destination anyway, right? So backtracking to the trail.
You're trying to, instead of walking directly to the place, you've walked all the way around the earth, and you're at the point where you're going to end up where you're supposed to, but you got lost getting there.
Right. Yeah. Like you're so far out there. So then you flip around and you start looking abroad, and it's the inverse. You find stocks that have pristine balance sheets paying 10, 12, 14% dividends with net cash on the balance sheet growing at 10, 12%, 15% a year in locales where their governments have infinitely more balance sheet flexibility in terms of their spending and their debt situations. And, you know, you look at places like Latin America that have solidly positive birth rates, whose governments are pivoting away from socialist practices. There's just so much other great stuff out there. And it's like I'm watching guys, you know, arm wrestle to see who gets the right to rearrange the deck chairs on the Titanic. Yeah. And again, not that we're going to the bottom of the ocean. I don't think the American market's about ready to implode. I just think, much like this year, when you look at the top 40 performing stock markets in the world, the United States isn't found in the top 30, right? And so I just think that everybody is blind to all the easy money that's been made in this market over the last 15 years. And we've made a lot of easy money this year, but it ain't from the U.S. markets, and I don't think it will continue to be. So,
well, you know, the insanity you were talking about, you know, the Tesla guy there. When we first started doing this a few years ago, there was one company that snuck up on $1 trillion. Nvidia is valued at $4 trillion. There's like 15 companies now. Once that ceiling was broke, it's like the 4-minute mile. Once somebody did it, then a whole mess of people are doing it. You've got, you know, that other company that got to $1 trillion, Apple. That's not they're down at the bottom of the trillion.
Well, it's weird to say, right? So we're kind of like looking at them not performing well, kind of bringing up the rear of the ranks. They're still sporting a $3.4 trillion multiple and trading at 33 times earnings. And I got to tell you, of all those companies, we've made some money being short Apple this year. We removed our short just because people are doing stupid stuff on Apple. But Apple's another one where everybody has this bulletproof Apple can't make a misstep. I'll be honest with you. And here's the thing, Chad. If I'm wrong, you know, I'll just come on and admit it. I think Apple's best days are behind it. I really do. I think, and there's so many crazy metrics to Apple that people do not understand. Do people out there realize that Apple is trading at twice the valuation of Google, and Google is growing 3 times as fast, has more revenue, has more profit, has real viable. Here's how screwed up this market is. Apple got this big run up to the highest valuation it's had at any time over the last 20 years, okay, based off AI hype. They come out and announce they're no longer pursuing their own AI, i.e., we can't get it right? Yeah. That's what they're saying, right? Their stock rallied 3% on that news.
It's a thing. Well, people, their sizzle. There was a stake you remember from 10 years ago.
Yeah.
Then you had it 5 years ago, and it was still amazing. And you're buying that sizzle, and you're going there, and you're reminiscing. And it's more about the reminisce because there's steaks next door that are way better, way cheaper, and they're offering a whole plate of stuff besides just a steak. Like you talk about Google, they got like 80 things on top of it all. Apple, we're going to bring out the iPhone 93. We have added one more smaller camera to it, lens. And you're like, okay.
And here's another great example. So the lack of thought and fundamental analysis that goes into this market is just mind melding. Okay. So Google's trading at about 18 times earnings. Apple's trading at 33, 34. Okay. If you listen to the people on the street and the detractors from Google, And I'm just using examples. There's so many more companies out there that are so much more deeply undervalued than even Google. But it just shows you how wonky this market is. Everybody goes, oh, that's because AI is going to just ruin Google search. Okay. And you go, okay, well, here's the funny thing. Have you looked at Google's search metrics since those AI LLM models were released? They've gone up. Okay.
Yeah.
Now, there is an AI that is cannibalizing some of Google's search. You know what it is? It's called Gemini.
Oh, okay.
It's owned by Google.
It's owned by Google. I've seen that.
Right? So that's the narrative on the street. Here's the funny thing. Let's take all of the revenue from Google from search away. Now that's never going to happen, right? If the FCC and the federal government made Google divest search, right, using antitrust laws, search wouldn't be worth nothing. Google would spin it out and IPO it into its own company.
Yeah.
Right? Or they'd sell it to somebody else. But I'm just telling you, most likely they would just IPO it. Okay, but let's say they can't. Let's say search is worth nothing. Let's say they can't sell it. They can't IPO it. A ridiculous assertion, but let's just say. Do you know what you'd be left with? You'd be left with a company that at today's price would be trading at the same valuation as Apple, but growing more than twice as fast.
That's crazy, dude.
So you look at them, you'll hear this whole thing and you're like, okay, well, let's say that happens. Let's say they get rid of search. It's worth zero. Where does that leave you? And you're looking at the guy, he doesn't even know. And you go, yeah, it puts you at the same valuation as Apple with a company that is growing more than twice as fast. So I say all this just to show people, look, if you're waiting for like a doorbell to chime or something like that to let you know that you need to pull back, because that's the other thing, Chad. People don't own Microsoft and Apple and Tesla in their portfolios. The 50 to 60% of their portfolios are those stocks.
Yeah.
Right. I see it all the time. As a matter of fact, I've got a guy, one of my clients right now that has a big position in Microsoft that, he doesn't want to sell a bunch of for cap gains for a bunch of viable reasons. Right now, I've got two of my analysts on a conference call with him working on putting together a strategy where we're purchasing put options. We're selling call options way out of the money, taking that premium, buying put options, so effectively giving him free insurance. So if the price of Microsoft, that's another crazy thing. Microsoft's $4 trillion now, right at it. Okay. Yeah. Do you know they're trading at 14 times revenue? One of the largest corporations in the history of the world is trading at 14 times revenue. Just mind-boggling. But great company, right? So what we're going to do is, first of all, we figured out we're able to sell about a third of its stock without taking any capital gains because we can offset it with some other things in his portfolio. So we're going to sell about a third. We've already done that. Make him a little less risk exposed. Then do that option strategy. So if the rest of it gets hit, the options will go up just as much as the underlying stock. That whole thing right there is costing him less than 1% of his overall position. Okay? So for less than 1% of the overall position, we can harvest a third of it with no cap gains and protect the rest of it. So when it goes back to a normal valuation, he's not going to take a 40 to 50% beating across the face. So like I've told people, do you need to just go out and sell all those things? Generally speaking, guys, if you've got an investment that's done that well, you should take some profits. There may be reasons why not, but there's simple things that we can do that other people can do too. We're not the only ones. But now is not the time to just again, you're going to feel like an idiot if you lose 40 to 50% of the value of a company like Microsoft when you didn't sell any when it was trading at 14 times revenue. If you don't realize how obscene 14 times revenue is, I'm going to do you a favor. I want you to go Google a company called Sun Microsystems and a guy named Scott McNealy. And you're going to read an interview he gave coming out of 99 and 2000 where he explains better than I can how insane that valuation is and how if you own a company valued at that highly for long enough, you will get wrecked.
And it wasn't Sun's, that wasn't their fault.
No,
that was the market and greedy people buying into something that pushed something to unimaginable position that it should never have been at.
And look, the same is true of all these companies. These companies are overvalued because they're the greatest revenue profit producers in human history. This is not a knock. Microsoft's right in my backyard. I've got friends and family that I had one of my best friend's wives and one of my kids' best friend's dads, who's become a good friend of my wife and I. They were at my 4th of July party. We're talking Microsoft. I got nothing against. I love Microsoft. They do great stuff. Right? This is nothing against the corporation. It's why all the time I sit there, people are like, why are you begging on Musk? And I go, I'm not begging on Musk. No. They're like, but you're short Tesla. And I go, my job is yeah, we shorted it at 400 and we covered it at 220. It worked great. Okay. Yeah. We just shorted it again at 330 and rolled it back down to 295. My job is to make money. I'm not for or long these guys, but when you show me an automobile manufacturer like Tesla, whose core business is shrinking by 13% a year and the underlying stock still trading at 175 times earnings, I'm shorting it all day long. Yeah. And if you get hurt in the process, that's on you. You got to keep your head on a swivel. Absolutely.
Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. All right, people want to reach out to you. You got your big webinar coming up in a couple weeks. What do they do?
Pretty easy to find us. Go to bulwarkcapitalmanagement.com. You can sign up for no cost. We're going to talk about this stuff and show some charts that show you where we're at in terms of the markets, and show you, hopefully you'll get this, the unbelievable opportunities that exist out there that are beyond just the top 7 companies in the S&P 500. So again, it's one of those things, you know us, obviously we're going to put our best foot forward because we'd like to win some new clients, but we also do this in a way where if you don't become a client, you'll still leave with something, that's workable, something that you can take with you that'll help you on your own. So go to bulwarkcapitalmanagement.com. Sign up for it. You can look for us at Know Your Risk Podcast. We're not hard to find.
Right on, brother. You have a good one. We'll do it again next week.
All right. Thanks as always, man. Good to talk to you.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.